Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has remained negative over the last 7 trading days since the peak of 70.31 back in December. And from the decline, still pressures the level of 68.45, which is seen as a bearish trigger. If the bears do manage to pull this level, then I do anticipate the market will fall further towards 67.70 or even lower down towards 67.15, with any advances to fall towards the region of 69 cents. Earlier today, the Australian retail sales crushed the forecast of 0.4% and surged to a 0.9%, giving some hope that the RBA may refrain from cutting rates in February. But still, at the moment, the previous job numbers that came out in December were still mixed, as the release came in at 35,000 part-time jobs and only about 3,000 full-time. Nevertheless, while we're still holding underneath this 60-day moving average, I do feel that the level will be pulled at 68.45 to give further opening to the downside. With the dollar index breaking further to the upside and posting a fresh high of 97.25, the fact is that further weakness comes through on the euro, and as you can see now, looks further to the downside with the immediate outlook holding at 110.55. Still to come is the main event, which is the non-farm payrolls number. Previous was a strong number of 266,000 jobs, and the market at this stage is looking for a slightly less number of 162,000 for last month. I have a feeling it will be a little bit more than that, around 180. If so, that should give further interest for the bulls to take the US dollar higher and see the euro continue on its trek, with the objective holding towards 109.55 to 85. Since this large candle and a rebound of 107.50-70, I do anticipate the bulls will attempt to squeeze the short positions out of the market and maybe take the challenge up to 109.65 or around the 110 area. I feel though from the supply area the market will be a little bit hesitant to take the challenge higher and therefore should give us opportunity to shorten the market and see a pullback to either 108.80 with a target at this stage at 108.15. Well, the news finally comes that the UK Parliament has given the approval for Brexit to withdraw the deal from the EU and now looks for the divorce on January 31. With a break of 130.40 this morning, not clearly broken, but still nevertheless I find the market is breaking down, should see further weakness, and from the break of 130.40 gives us a target of 129.10. Any advances should find resistance around 131.60-70. Gold is still weak and takes out the level of 1,550 overnight and now gives some question whether the bulls will come back and defend until we see the region of somewhere around 1,522 to 26, with safe haven demand diminishing, along with the fact that US and Iran tension has eased, is that we could see further weakness into the coming session, with the immediate target seen around 1,540.42, which was the low, and maybe on to 1,534. Unless we get a break of 1,565, then the bears should keep in motion until we reach the downside target. Wrapping up with oil, the market was a little bit weaker and continues on and looks towards this trend line now at $57 a barrel. I do anticipate demand will come, like previously in the past, from this support line and see a rebound back towards the region of $60 to $63 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day and to the new weekend.